All right, then just to kick us off, let's just to welcome everyone to this first webinar as part of a series of capacity building that we'll be providing to selected central banks across the African region. We're delighted to have you on this webinar. It's the first of many to come. So just to frame the discussion today, this is the Digital Financial Services Capacity Building Program for central banks. This is the first session being Fintech regulation and cybersecurity. My name is Sabelo Zwane. I'm an engagement manager and regulatory development consultant with Senfree, and I'll just hand over to Astrid, who will be just giving the run-of-the-mill to the French-speaking participants as to how you can access the translation. So over to you, Astrid. Thank you.
You are on mute.
Okay.
Astrid, on ne t'entend pas, Astrid, tu es en mute.
Oui, bonjour à tous, donc Astrid de Germay de Horus. Donc pour les participants qui nous ont rejoints, qui veulent la présentation en français, vous pouvez cliquer sur le bouton plus en bas à droite de votre écran. Vous avez ensuite dans le menu le terme interprétation. Vous aurez donc accès à la traduction en simultané de ce webinaire avec nos interpréteurs. Pour toutes les questions, vous les posez dans le chat box, questions et réponses, également à côté du petit bouton plus. Voilà, n'hésitez pas à poser vos questions sur ce chat. Merci beaucoup. Thank you, Sabelo.
Thank you, Astrid. I'll now hand over to the task manager for this exercise, providing his program management understanding of how this project came together and how we're all the lucky beneficiaries of such an exciting session. So I'll hand over to you, Mohammed, just to walk us through how the program's been designed and, more importantly, how we've landed here. Thank you. Over to you, Mohammed.
Thank you very much, Sabelo. Welcome to the nominees and participants. And again, welcome to the Digital Financial Service Capacity Building Program for central banks. This program is designed to provide a training insight for central banks for the digital financial service and also to mitigate the emerging risk with the digital financial services. This training will focus on strengthening digital financial oversight as the priority area based on the training needs assessment that we did at the prior of this year. And this initiative is funded by Korea Africa Economic Cooperation Fund, COFEC, with a resource funded for Africa Digital Financial Service, ARFI, and both hosted and managed by African Development Bank. Africa Digital Financial Service, ARFI, it works to address a barrier and growth to uptake the digital financial service, especially for women and micro small businesses by making strategic and catalytic investment for digital financial system. So again, welcome to this program for central banks, and I will put the floor to Sabelo again. Thank you and welcome.
Thank you, Mohammed. So just to frame today's discussion and understand how the webinar agenda stacks up. So I'll be moderating the session alongside a very strong colleague of mine, Jean-Louis Perret, who comes from the Africa Cybersecurity Resource Center. He's the director there. So together, him and I will be covering some of the engagement in terms of the moderation side of this seminar or webinar. And more importantly, I'll be handling the first part. So as you can see on the screen, we'll be handing over to Mr. Godfred Asan from the Bank of Ghana, who serves as a team lead and the Oversight and Supervision Unit of the Fintech and Innovation Office. So somebody who's tried and tested in the regulatory space, as we all appreciate how far Ghana has gone in terms of their Fintech story and their uptake of digital financial services. Thereafter, we'll be moving over to a presentation from Jacqueline Juma, who is the Director of Advocacy and Capacity Development at Africa NENDA, and she'll be zooming out slightly in the session, focusing more on regulating fintech in practice and giving a more regional perspective. Thereafter, we'll take a small health break from 12 to 12:05, and then we'll move into the cybersecurity regulation context in terms of how we can understand the specific aspects of how cybersecurity plays such an important role in terms of regulating the fintech space. And that will be led by Jean-Louis, who I introduced already, who's the director of the Africa Cybersecurity Resource Center. And then there'll be a presentation from Tomas Gadosh from the IMF, who is a senior financial services expert. So he'll be walking us through that component. In terms of housekeeping, we appreciate most participants should be on mute if you're not a presenter. We do have the chat function, so please be adding your comments, questions in the chat function, and thereafter, at the end of the session, we'll have a bit of a panel discussion where we can be responding to those questions and teeing up some of the answers you might want to hear from. It's also important to note that the slides will be shared after today's session. So there'll be English slides, that the slide deck that you're currently seeing, as well as the French slide as well. So you can always come back to these particular slide decks if there's anything you'd like to pick, or if there's any particular body of information you'd like to zoom into with your respective teams in your central bank. So on our side, just to highlight to the speakers, we are going to be strict with time. I myself have 2 minutes left. So it's just to flag, I will be highlighting when you have 5 minutes left in your presentation. And I think it's probably best I move forward through. Any questions, please shoot them into the chat, and I think Astrid will be able to respond. Thank you. So let's frame this discussion today. So what is the objective? Ultimately, I did highlight before that we do have a series of capacity building segments. We're starting off with 2 webinars with the participant central banks, and thereafter we'll be moving towards more deeper dive virtual sessions. And then after that, there will be a what I'd call a in-person or physical engagement in Addis Ababa in November towards the end of the year. So this is definitely part 1, and there will be many parts to follow. So what we're trying to do today as an overall objective is just strengthen and kind of provide an introductory overview of fintech regulation, cybersecurity, explore some of the practical experiences thus far, the regional perspectives that will be illuminated by Jacqueline from African Ender, and then also zoom into some of the cyber components. So quite light touch today. It's not going to be necessarily too technical, and the idea is just to give you the run-of-the-mill overview of how this should start to set a foundation of your understanding. A lot of you are already interacting with fintech. You're already experiencing disruption within your respective jurisdictions, and of course, there's a whole component of a central bank's mandate towards looking at market development and how fintech can actually enable financial inclusion. And that's where the ADFI component plays such a critical role. So ultimately, we'll be concluding with the panel discussion at the end. So please do reserve some of those key questions you have. But the idea today is just to introduce the subject matter and not necessarily go into too much technicality, but just give you a direct and live experience from the panelists themselves, the speakers, who are tried and tested and who've encountered a number of the challenges that you encountered at your desk today. So how do I frame this? Technically speaking, the fintech tree is quite a well-known taxonomy. The idea is to try and understand how the fintech tree stacks up in terms of where everybody sits. So at the top part of the tree, the fruit, what's bearing fruit in the industry is very much the products that you're seeing as a result of fintech coming through and disrupting the financial services sector. There's a series and a plethora of fintech activities, and these are as follows. You have equity crowdfunding, you have robo-advice, you have e-money, you have digital payment services, insurtech, and all of the different activities that you're encountering, be it digital banking licenses, are enabled through new technologies. So these emerging technologies speak to APIs, which is informing a huge body of work across open finance, open banking. Of course, there's cloud technology, there's biometrics, which underpins a lot of the digital identity stuff. But more importantly, it's understanding how these technologies then need to be connected to the roots, and those roots are policy. So I like to always start with the fintech tree as a visual aid to try and understand where the role of central banks sits. And very much your role is not just understanding the activities per se, but more importantly, also understanding the enabling technologies And then prior to that, now thinking around how you shape policy to allow for the fintech tree. I see Godfred has a question. Can you see me now? I can't see you on my side, so someone else will have to confirm, Godfred. I'll move slide. So I think it's no surprise here today that, in terms of fintech, financial technology, it's emerged as a key mechanism to deliver greater financial inclusion. It's also there to enhance robustness, inclusivity of the financial system as a whole. It allows for extreme access across what I'd say marginalized groups. And of course, it's driving a much larger economic agenda across markets worldwide. However, if it's left unregulated and unsupported, it does pose huge risks. And I think the majority of these risks sit not just within the financial stability component, but more importantly, through consumer protection. So the main questions I'd like to just share in terms of framing this discussion is to get the central banks today to be thinking about what activities need oversight, who should be licensed, and more importantly, what is the balance of proportionality for emerging models? And this then speaks to the key outcomes you want to inform. When you look at these questions, starting with the end in mind becomes critical. So how do you build trust? How do you support innovation? And of course, how do you allow innovation to support inclusion? And finally, just as a quick takeaway before we segue over to Godfred's presentation, understanding what are some of the practical tools for regulators to assess fintech models proportionately. So I've left you with the 5 Ps here. Be thinking on these as we go through. You'll be hearing some reference to them, but I like to frame this as understanding how you approach fintech, understanding the product, who the provider is, what platform is it being provided through, and who are the partners. We see a lot of the initial fintechs coming through a partnership model with licensed financial institutions already. And that plays a key role in terms of understanding the nature of the relationships and how you regulate that. And then finally, of course, where the rubber meets the road, the policy angle, which is critical to central banks. So without further ado, I'll now hand over to Godfred, who will be taking us through his presentation. Welcome, Godfred. Please introduce yourself. Thank you.
Thank you very much for the nice introduction. My name is Godfred Razak Hassan, as earlier indicated. I work with the Bank of Ghana in the Oversight and Supervision Unit. I lead one of the teams in the units. Bit of background, I've been working with the bank for almost 9 years now in 2 different departments, which are very much related, payment systems. Then I moved on to the Fintech and Innovation Office where it was started. The engagement today is basically for us to understand the journey of Ghana when it comes to Fintech regulation. So we'll be taking you through the background, mandate of the bank, areas in Ghana that Fintech is disrupting, as is doing to your various jurisdiction as well. The Fintech landscape in Ghana, some of the policy initiatives that has been embarked on in the Ghanaian context, and then the ongoing ones. We'll look at the challenges and opportunities related to regulating this fintech space and the opportunities that they bring to us. Then after that, we'll take some questions and answers. Next slide, please. Okay. So a bit of background. Ghana's payments landscape, or the fintech ecosystem, started with the establishment of the RTGS platform, which we call the Ghana Interbank Settlement, which is our wholesale settlement platform, which was established in 2002. This is basically for the banks to settle among each other. Following from that, the bank established the Payment Systems Act. So the Payment Systems Act in 2003 sought to enable the bank put in place the necessary infrastructure when it comes to payments. And following from this, we had the Ghana Interbank Payment and Settlement System being established as a subsidiary of the Bank of Ghana, solely responsible for retail payments. So from Gibbs, we had the national switch and also retail settlement. So they do clearing, check code line clearing, ACH, amongst others. Then with the coming in of Gibbs in 2007, the bank also sought it wise to enable the retail payments, because that would be the basis for the development or growth in the country. So we wanted to create an avenue where banks can be seen across the country for financial inclusion purposes. So we came out with a branchless banking guideline. And this guideline sought to enable the banks to partner mobile money operators, which we call the dedicated electronic money issuers in Ghana, for them to offer services to the populace in the country. So this saw the coming in of the mobile money operators issuing electronic money. In 2009, we had our first mobile money in Ghana. Then looking at the pace at which the development of the fintech space or the mobile money space was going, we had to enable policies to provide guidelines to the ecosystem for the smooth operation of these fintechs or the electronic money issuers. So we came out with the EMI guideline as well as the agent guideline to enable these mobile money operators or mobile money networks grow across the country or deploy agents across the country to serve customers for financial inclusion purposes. Now, looking at these trends, we realized that the ecosystem was increasingly growing and that we needed to regulate these fintechs directly. Previously, with the branchless banking guideline, which sought to provide a bank-led model. So in the introduction, the introductory speaker made mention of banks partnering with these fintechs to provide services. That was what was exactly happening. So we had the bank-led approach with the branchless banking guideline, the EMI guideline coming into force. So we realized that the fintech ecosystem is increasingly growing and that there should be an enactment or a law that will be regulating them. So we came out with the Payment System and Services Act in 2019, which sought to amend the 2003 Act and also consolidate the branchless banking guideline as well as the EMI and agent guideline. So this act gave us the mandate to regulate, to license and supervise fintechs in Ghana, which includes the mobile money operators and the payment service providers. Following from that, we issued a Cyber and Information Security Directive and also came out with the payment system strategy. Now, when the Act in 2019 was established, we realized that the already existing structure of the bank, we needed, because of the speciality of the fintech space, we needed to have a separate department or office who will be responsible for managing or supervising these fintechs who we regulate. In this sense, we came out, the management of the bank established a separate office, which I am currently working under, called the Fintech and Innovation Office. Please, next slide. So the Fintech and Innovation Office was established purposely to license and supervise or have oversight responsibility over the mobile money issuers, payment service providers, closed-loop payment products, and also enable emerging forms of payments delivered by non-banks. So like I said earlier, the non-banks who were providing payment services, which we currently call the fintechs, were increasingly growing in the country, and we also saw the potential that they can bring to the whole ecosystem. So this office was established purposely to have oversight of these fintechs. And also, as part of our mandate, we weren't just supposed to license and supervise them, but also seek their growth. So you have to develop policies to promote these fintechs, promote innovation, and also promote interoperability in Ghana. So you realize that the first interoperability that we had in Ghana was in 2018. We sought to integrate all the mobile money ecosystem as well as the bank. So you can send money from your bank account to your mobile money wallet, as well as move money from your mobile money wallet to your bank account seamlessly. And this was done with the policy direction by the bank and also in partnership with the subsidiary of the bank, which is GIPS, the Ghana Interbank Payment Settlement System, to roll out this interoperability. Next slide, please. Now, with the establishment of the Fintech and Innovation Office, we had to get a supervisory framework. So our supervisory framework or our supervision framework that we operate in Ghana, we've categorized them into 4 main thematic areas. So we have the financial regulation, which is mostly led by the bank. We also have our national legislation, which we work with in partnership with other stakeholders to implement. We have our regulation and supervisory tools, and also the policies that will enable this fintech space to thrive. So when it comes to financial regulation, we have the Payment System and Services Act, which is the mother act that regulates the fintechs. We have the Act 930, which supervises the banks. And also we have area-specific regulations and guidelines that support our regulation. So, for instance, the AML, CFT Act, and all that. We have national regulation like the Data Protection Act, Consumer Protection and Compliance laws, and also AML, CFT laws in the country, which we use as part of our tools in regulating these fintechs. We also have the supervisory tools, platforms that we use, fraud monitoring tools, as well as sandbox that we use to regulate these fintechs. Now, when it comes to policy, with the establishment of the Fintech Office, there have been so many policy directions that has been implemented, like the inward remittance guideline. We have the international card schemes, who we did a regulation on domestic card processing. So when you are processing card or making payments with any of the card schemes in Ghana, we are saying that all the cards that are being processed or being issued in Ghana, when you are performing transactions in Ghana, it has to be processed locally. We also came out with a crowdfunding policy as well. Next slide, please. Now, areas that fintechs are disrupting, we all know in our jurisdiction, this might cut across various jurisdictions. So we have lending, savings, investment, payment aggregation, acquiring, pensions, inward remittance, payment processing, as well as mobile payment. All these areas are being disrupted by fintechs, and this creates the necessity for us to have an oversight responsibility of these actors or the fintech companies. Next slide. Okay, so policy initiatives. So I've touched briefly on some of the initiatives that we already implemented. So after the Act 987, which is the Payment Systems and Services Act, and the establishment of the Fintech and Innovation Office, which both serve as catalysts for regulating the fintech space, the bank had to come out with the licensing requirements or licensing application pack for payment service providers. So the application pack constituted the licensing requirements for payment service providers, the license categories, as well as the minimum requirements, capital requirements that is needed for having a license to operate as a payment service provider in Ghana. Now, we have the license categories. So the categories have been done in such a way that depending on the activity that you are performing, you are being categorized into a specific license category. So we have about 6 license categories. Depending on the nature of risk of the activity that you are performing, you will fall under one of them. Then, like I said, we are supposed to supervise the entity. So we came out with a supervision framework, which is a risk-based, following from the licensing categories, which is also risk-based. Then we have the tool that we use to supervise this entity called the Supervisory Intelligence Platform, which is an in-house developed tool which is used to analyze returns that are being submitted by these financial fintechs. And also, as time goes on, we report to the industry through our fintech sector reports and publication, which is one of the initiatives for the industry or the market to also know what is happening within the fintech space. We also did some updates on the interoperability that I spoke about earlier. So previously, the interoperability was first done in phases. So the phase 1 was sending money across mobile networks. The phase 2 sought to do it across mobile networks as well as the banks. So we've been able to achieve that. We also have the crowdfunding policy. We sought to regulate crowdfunding activities because from where the jurisdiction that we are coming from, this is something that is being done at the local setting. So in our villages, you see that people will come together to raise funds for a particular cause. So why don't we do this by providing a guideline which would try to digitize the whole system and also ensure the safety of this activity? Then we have unclaimed and dormant account policy, which seek to guide the mobile money operators. One of the important initiatives or policy direction that we also came out is the inward remittance guideline. Now, when we looked at areas that fintechs are disrupting, we mentioned about the inward remittance area, which currently is a big deal. So how can we do this without it having impact on our FS as well as having convenience to the customers? So currently, when funds are being remitted to beneficiaries, they are able to receive it on their mobile money wallet or their bank account. Next slide, please.
Godfred, you have 5 minutes left.
Sure. So touch briefly on ongoing. So the previous ones were initiatives that have been already carried on. These are ongoing initiatives that the bank seek to bring. We have the digital credit, which seeks to regulate the digital space. Please, the next slide. Virtual assets, which we are exploring to regulate this. We know virtual assets is becoming a big deal now. So the bank has come out with, is trying to develop regulation to cater for these virtual asset service providers as well. Next, please. Then we have the central bank digital currency, which the bank started exploring somewhere in 2022. We've done a pilot on it. We've issued a white paper on it as well. Next slide, please. Now, challenges that the fintechs bring, or that we are currently facing with regards to regulating this fintech. One of the main challenges is information asymmetry. Now, the information asymmetry here is that the fintech space is a bit dynamic. These people are new to regulation. Sometimes getting our communication clear to them is a bit challenging. Also, even when they come to us for product approval or requests, how to communicate for us to even better understand is also a bit of challenge. Now, another challenge that as regulators will face is balancing innovation with compliance. Now, like I mentioned earlier, these fintechs are new to regulation. We want to promote innovation as well. We want to guard financial stability. How do we balance this act? Another one is dependency on other stakeholders. So we work with other stakeholders like the pensions. You have to work with the pension regulator. If there is a lending insurance product, you have to work with the insurance regulator. So these dependencies sometimes affect the regulation. The maturity of the industry to compliance. The fintech space is a bit new. These guys are new to regulation, so they are not matured enough to accept some of the requirements that are being given to them. Then dynamism of the fintech space. This is an agile space, an agile industry. Things keep changing faster, and as regulators, we have to keep abreast with it. The next slide, which I presume is the last slide, talks about the opportunities that we have as regulators when we supervise these people. We will see that there will be an enhanced supervision to ensure that the ecosystem is safe. Innovation promotion, we are able to promote the innovative ideas that these fintechs bring, and also portray a positive image. You wouldn't want someone doing something somewhere which the regulator doesn't have oversight on. It doesn't speak well of the country, it doesn't speak well of the regulator as well. So when you bring these people under regulation, it's very important. And also it promotes competitive markets. Now, regulating these people and providing some guidelines for them enables competitiveness within the ecosystem. And also the last bit is that it's also ensure integrity of the financial system. I think this will be the end of my presentation. If there are any questions, I'll be glad to take them.
Thank you, Godfred. Very insightful. We'll be taking questions at the end of the session. So we'll just move now into Jacqueline's presentation, who's providing some African perspective from African Nenda. So over to you, Jacqueline, and thank you, Godfred.
Thank you. Good morning, good afternoon, everyone. Jacqueline Juma from Africa Nanda. I'm the Director for Advocacy and Capacity Development. So today I'll provide a practical perspective on regulating fintech in Africa, sharing both the urgent challenges we face, the bold innovations and coming out of the region. And at the end of it, we'll discuss key considerations for the regulation and supervision of fintech in Africa. Next slide, please. Just revisiting what we mean by fintech. We're not just looking at fintech from an entity perspective, but appreciating that this from a spectrum where we're looking at advancements in technology from both fintech firms specializing in technology-enabled financial innovation. Originally, technology firms venturing into the issuance or filling in gaps when it comes to extending financial services, and also incumbent financial institutions that are exploring digital transformation. Next slide, please. Before we get into the meat of the discussion today, I think it's important to appreciate the magnitude of the problem statement here as Africa. Our challenge here is that over 400 million adults remain financially excluded, which is a staggering 1/3 of the continent's adult population. Next slide, please. With this understanding, if everything is left unchecked, the trends are suggesting that come 2030, and I'm saying 2030 because of the many goals that are aiming at this as the ceiling, come 2030, we still have over 300 million African adults excluded. This exclusion is not just a statistic, it translates to the understanding of how families will continue to be trapped in poverty, especially from low-income segments, certain demographics like women, etc. And the story is similar across the region. So the landscape is still shaped with persistent cross-country barriers, including inadequate physical and digital infrastructure, limited financial literacy, regulatory hurdles, some of which we'll be discussing today, and high poverty rates. All these factors continue to introduce vulnerabilities to the especially the low-income segments, resulting in a cycle of poverty and exclusion, thereby eroding resilience and deepening inequality across board. Next slide, please. Still in appreciating how far we have come and the role of fintech in digital financial services in Africa, DFS across Africa have undergone profound transformation, as you can see, due to the rise of fintech, fundamentally reshaping how individuals and businesses interact with financial systems. From the introduction of technology-driven platforms that have enabled millions to access payments, credits, and different products and services. We also see agile fintech firms specializing in rapid innovation, frequently responding faster to user needs than how we have done traditionally. We're also seeing established financial institutions, what we typically call the incumbents, embracing digital transformation by adopting platform-based models and integrating advanced technologies, allowing them to extend reach, tailor services, and even support risk management as they go along the way. The result is a new ecosystem where financial inclusion advances not only through the creation of new channels, but through continuous improvements in product stability, services quality, and operational resilience. Next slide, please. Now, as we delve into the core of the discussion today, which is fintech, we see, first of all, a very dynamic landscape with key players and emerging regional hubs. The Africa's fintech ecosystem is exceptionally vibrant and characterized by a diverse mix of innovators operating at local, regional, and continental levels. The landscape here, as you can see, features a range of dynamic entities from agile startups scaling across border to robust domestic brands, some of which we typically know in different markets. And what I've highlighted here is just some of the leading markets with a lot of vibrancy when it comes to the fintech sector. So not all, but a few that are just leading the pack. We're also seeing the consolidation of digital bank, platform-based payment services, inclusive instant payment systems, all contributing to the dynamism and also most recently emerging is the cross-border activity and a collaborative, innovative approach. You were to ask ourselves what is really fueling this vibrancy, we would say a blend of entrepreneurial energy, supportive policy shifts, expanding digital infrastructure, and a growing recognition of fintech's role in driving inclusive financial solutions, given the understanding of where we need to go to and what we need to do. And we also see that this collective things set the stage for understanding the key enablers for powering fintech growth in the continent and responding to regulatory evolution. Next slide, please. Speaking of key enablers of the growth of fintech in Africa, we asked ourselves what has spurred such impressive growth. So several factors stand out, some of which I've just highlighted in the screen, where we see strong domestic ecosystem supported by innovators. For instance, we have the mobile money and leveraging mobile money solutions and services. We're seeing progressive regulatory pushes where different countries now, Kenya, Ghana, and many others are pushing for interoperability and also pushing for interoperability not only between the players, but interoperability from an infrastructure point of view, where we see the national payment systems bringing together both banks and non-banks within the domestic as well as regional endeavors. Increasing cross-border use cases and also the appetite for and opportunities for cross-border sandboxes that enable solutions, especially to do with payments, whether it's to do with remittances or merchant payments, and so on. A rise in consumer awareness and digital literacy and growing private-public partnerships and the spirit of collaboration. And most importantly, we are seeing international investment skyrocketing, with African fintechs attracting approximately over $1 billion as of 2024, and this is according to the ECOFIN agency. So a lot of opportunities in terms of investment and funding, although this one, as compared to previous year, is a bit slow. Next slide, please. After appreciating the enablers, we also look at the flip side of the coin, which is the challenges to the growth of fintechs in Africa. And these significantly remain things to do with regulatory uncertainty for new products and tech, considering some innovations are falling outside of existing laws, or sometimes it's just that aspect of how fragmented the ecosystem is from a continental perspective. This fragmented regulatory oversight, especially in product span countries where fintechs, in terms of entities, are looking to scale from one country to another, which is a common occurrence, but the multiple regulatory requirements are a hindrance to that scale. And other aspects such as infrastructure gaps, limiting funding, infrastructure gaps, limited funding for smaller startups and participant trust issues in certain segments. Also to note issues around cybersecurity, like recently noted in the CCAF study, that is a Cambridge Center for Alternative Finance study, where those statistics around saying that 61% stress rising cyber risks as key risks, and that is responses from African authorities, and also bringing in that aspect of prioritizing cybersecurity frameworks in the recent times. Next slide, please. So with this appreciation, what then, or why should we consider new approaches to regulation and supervision of fintech in Africa? First of all, it's important to have a deep understanding of evolving risk as an essential first step in responding to the rise of fintechs across Africa. The rapid evolution of fintech brings not only unprecedented opportunities, as we have seen, as we have shared, but also new operational, prudential, and market conduct risks, ranging from cybersecurity threats and third-party provider vulnerabilities. We've seen things like irresponsible digital lending and data misuse and so on. And so what we have known thus far as traditional oversight mechanisms are being stretched as fintech activities transcend geographical borders and also just blur sector boundaries and or business model boundaries and produce products that outpace legacy regulations. So this is a reality that justifies the move towards new adaptive regulatory approaches that are risk-based, proportional, and what I would say technology neutral. Similarly, we're seeing African regulators increasingly navigating capacity constraints and fragmented mandates and fast-changing risk profiles. This underscores the need for coordinated, flexible frameworks that balance innovation and stability and integrity. And then in appreciating this, ultimately we're seeing fintech-driven financial inclusion and just that enabling environment that is required to push the continent forward. Next slide, please. And now we'll zero into what we mean by some of these approaches. We'll look at a few principles of fintech regulation on that basis, where we continue to see African leaders operationalizing several principles to just build inclusive, resilient, and innovation-friendly fintech ecosystems. And these are implemented through pragmatic licensing frameworks, for instance, sandbox experimentation, risk-based supervision, and so on. So here we look at, for instance, clarity on what activities are supervised, as mentioned by my colleague, and how it's critical for turning market complexity and mitigating regulatory gaps. And this is where we see, for instance, some regulatory frameworks now specifying detailed licensing categories and requirements for fintech, such as e-money issuance, payment service providers, digital lenders, and so on. And we also see other authorities bringing all digital financial services under one primary regulator to enhance comprehensive oversight and also consumer protection as these business models evolve. We've also seen some examples, for instance, in lowering entry barriers, especially for non-banks. And this also applies to mobile money operators and fintech startups. So it's to give them a platform to offer core financial services and fill in the gaps where, as we have explained, that some of these gaps that are contributing to financial inclusion. Some countries, for instance, have done this through direct e-money licensing and bespoke frameworks, boosting competition and catalyzing new solutions for underserved populations. Also the tiering aspect, which allows smaller and specialized fintechs to operate under proportionate requirements and also provide input into decision making, for instance, when it comes to instant payment systems or schemes for that matter. And we're also seeing African regulators increasingly focusing on strengthening operational and cyber risk frameworks, recognizing that systemic technology and outsourcing risks are growing. And this is where we see the emergence of regulatory sandboxes, controlled environments, to just promote innovators, to test products under supervision. Those, for instance, those that enable safe experimentation with blockchain payments, insurtech, cross-border remittance corridors, and by so doing, helping authority plan quickly while enabling innovation to advance responsibly. Next slide, please. Supervisors across Africa are adopting these innovative practices. Not all, but the list is not exhaustive, but just for the sake of time, we have highlighted a few here, where I've spoken about the sandboxes as a critical tool offering that controlled environment. And we can speak about a few examples. For example, in South Africa, the Intergovernmental Fintech Working Group sandbox that has enabled pilots for offering like crypto asset trading and so on. And we also have similar sandboxes in other jurisdictions that have advanced mobile insurance, alternative credit scoring, cross-border remittance solutions, and so on. Also, to address the specialized skills required for fintech oversight, we're seeing some central banks have set up dedicated fintech and innovation offices, which are just units that act as bridges between regulators and the fintech sector, and by so doing, they accelerate policy responses, and just ensuring real-time market intelligence. To name a few, maybe countries like Ghana and Egypt offer foster innovation, and these are not the only countries, just naming a few, offering innovation by providing regulatory guidance and acting as single points for contact for digital finance operators, clearing any uncertainties and supporting that process, even to do with the application for licenses and so on. The other thing we're seeing is that authorities are increasingly leveraging regulatory technology, RegTech and SupTech, to enhance their capacity for compliance monitoring, fraud detection, and consumer protection. And use cases here range from the deployment of AI-driven transaction monitoring tools to anti-money laundering, to digital dashboards, etc. And also, maybe just to appreciate this technological shifts not only expands regulatory reach and efficiency, but also sharpens responses in how they manage evolving and upcoming risks. Also, maybe just to mention a few, as fintech blurs traditional sectors and models, and even geographic boundaries, supervisors are prioritizing collaboration. And this happens both within national governments, among different regulators, data authorities, and consumer protection agencies, and also regionally. We're also seeing such partnerships enabling harmonized standards, facilitating the operations of cross-border payment systems, and helping address regulatory arbitrage. Notably, the expansion of regional forums and information sharing agreements, supporting collective action in areas like cybersecurity and cross-border digital payments. Next slide, please. One other aspect that is really critical to this process, just to mention, when it comes to protecting consumers and safeguarding financial stability in Africa, fast evolving fintech landscape. The regulators are focusing on several measures, as you can see. One, authorities now require e-money issuers and other digital providers to ring-fence and segregate customers' funds. And we've seen this in different examples where this is commonly enforced through mandates for funds to be held in dedicated trust accounts, for instance, at regulated financial institutions. We're also seeing regulations increasingly emphasize that customers must be clearly informed about the risks, protections, and terms associated with digital financial products. And there's a process, which also involves ongoing education initiatives led by the regulators themselves and requirements for providers. And we're seeing such rules reduce the risks of mis-selling or encouraging informed decision-making, especially by users, and more so those that are at the bottom of the pyramid. We're also seeing larger and systematically important fintechs now being obliged to have well-documented plans to manage operational crisis and unexpected exits. And then lastly, we're also seeing regulators are assessing whether and how deposit insurance schemes should extend to users of non-bank e-money and fintech products. And such countries are considering either granting direct access to such protection or implementing pass-through coverage where funds stored with licensed banks are covered. Next slide, please.
Jacqueline, you have 4 minutes left. Thank you.
Thank you. In conclusion, we can, the journey towards an inclusive, resilient, and innovative African fintech sector hinges on both intentional actions by regulators and policymakers, as you can see. We have highlighted some of those things that are really critical. First is essential to build supervisory capacity. This means not just investing in advanced skills and fintech dedicated teams, but also invest in tech and super. And in evolving technology to keep regulation strict, smart, and responsive to market realities. At every step of the way, consumer protection, stability, and integrity must be forefront and center, with a proactive risk-focused lens aimed at both established payments and emerging sectors like crowdfunding and digital assets. The other thing is collaboration, which should be the heartbeat of progress. We need to see partnerships across governments, industry, and the international community. We're also seeing the opportunity for Africa to harmonize standards, share intelligence, and manage cross-border challenges in real time, amplifying the reach for efforts like the African Union Digital Transformation Strategy, the AFCFTA Digital Trade Protocol, among others, which unify the continent or basically continental boards. There's also the aspect of regulations being proportionate, risk-based, and technology neutral, supporting responsible businesses, while leaving space for creative solutions tailored to Africa's diversity. Above all, constant vigilance is necessary, using data, ongoing engagement, dialogue platforms between the private sector, regulators, and other stakeholders. And our continuous learning mindset will ensure that the regulatory framework really match the speed and ambition of Africa's fintech revolution, and what this means in terms of accelerating digital financial services and financial inclusion at the end of it. Ultimately, as the African fintech sector looks forward, the right policy responses will unlock innovation that delivers fast, lasting impact, broadening access, empowering people, and opening up unprecedented opportunities across the world. Ladies and gentlemen, I'd like to stop there and allow for questions. So thank you very much.
Wonderful. Thank you so much, Jacqueline, for a very comprehensive presentation on the African perspective. I see a lot of emoji hands clapping. Very comprehensive, and also thank you for keeping to time. So as I did mention, we'll be taking questions from the participants in the last part of the presentation. So please stay on, Godfred, as well as Jacqueline, if there's any questions that pop up in the chat that you want to be thinking on. I see a hand from Daniel, and then after we've heard from Daniel, we'll be taking a 5-minute health break just to grab a tea, stretch your legs, and then we'll move into the cybersecurity component of this webinar. Over to you, Daniel. Thank you.
Thank you, Sabalo. Mine is not a question. I was drawing the attention of the presenters to the chat box. We have some questions being dropped. So if they could take that also on board. Thank you.
That's duly noted. Thank you so much, Daniel, for that observation. So we'll now just take a brief break, and then we'll be back in for a session on cybersecurity with Tamas from IMF and with Jean-Louis from the Africa Cybersecurity Center. So looking forward to that as well. Thanks, guys, and chat to you soon. Okay, hoping everybody's back. Maybe you could just show by a thumbs up indication whether you're back at your desks, and we'll start in about a minute's time. I see a few thumbs. We'll be handing over now to Jean from ACRC, the Africa Cybersecurity Resource Center. And thereafter, I think he'll be framing the discussion to introduce Thomas from the IMF. So if you're ready to start, Jean-Louis, I'm happy to hand over to you, sir. Thank you.
Thank you, Sabelo. So I am Jean-Louis Perrier, the Program Director of the Africa Cybersecurity Resource Center for Financial Inclusion, or ACRC. I'd like to start by thanking ADFI for driving this ambitious program. Our partners, Horus and Sentry, and Tamas Gaidos from the IMF, who brings invaluable insights to help us strengthen cyber resilience across the African financial sector. We will, and we will see that cyber risk has become the #1 operational risk for the financial sector, and digital financial services are particularly vulnerable, directly threatening the development of financial inclusion and also financial stability. Tamas will come back on that. I will set the stage, then Tamas will explain why and how regulators must anticipate and manage these risks. I will conclude with a condition for success in Africa, joining forces to co-build an African cybersecurity community, the only way to effectively confront a risk that knows no borders, as you know. Let's have a few words about ACRC. So ACRC is both a project and an organization that is sustainable, that is built to deliver a long-term response to cyber resilience challenges for the African financial sector. So it is a regional and sector member-driven community. The financial sector in Africa is very large, more than 4,000 or 5,000 financial service providers, fintech, insurances, telco, central banks. ACRC is a collaborative network supporting and strengthening local or regional initiatives that are also quite numerous. It is an independent and not-for-profit public-private partnership consortium, and the ADFI, Africa Digital Financial Inclusion Facility, is our first funder. And of course, thank you again to ADFI. The way we have designed ACRC is scalable. We have a hub today in Senegal, and the idea is to replicate this hub in the different subregions on the continent. Our key focus are capacity building, information sharing, and strategic and regulatory advisory services. We will see a little bit later why. So ADFI, let's see some recent incidents in the African financial sector. Do we have a problem when we see this slide? Obviously, we do. We have a number of central banks, development banks, mostly all banks, be they local or regional banks or international banks, have been hit by a large scale incident in the last 2 or 3 years. We will not go in all the details. We will give more details in the on-site seminary later in the program. Just the next slide, please. And we see also that insurance, microfinance, fintech, and telecommunication networks have been hit. So this is a result of our open source intelligence. We do analyze all major incidents happening throughout the continent and try to understand who are the hackers, how did they enter in the systems, what did they do when they were in the systems, and so on, to understand in depth the threats. Actually, you can do nothing in cybersecurity if you don't have a proper understanding of the threats. We have also an interesting assessment from Interpol. You know, Interpol, they are one of the key players in the fight against cybercrime worldwide. And they have an interesting assessment about Africa. What we see is that we have a shared threat landscape driven by digital expansion, and in particular the development of digital financial services. There are some regional variations in preparedness and capacity, but the attacks threaten the whole continent. We won't go in all the details, but this is the reasons why I am now handing over to Tamas to see if we can find some solutions. Thank you, Tamas.
Thank you, Jean-Louis. And I'm so glad I am invited to this forum. Also glad to have heard about the fintech tree. It really is a very visual representation of the fintech phenomenon, if you wish, starting from the roots and then the trunk and finally the leaves. And also Jacqueline for mentioning very key and important elements of an effective regulation in general. And you wouldn't be surprised in cyber risk regulation, same things mostly apply. But let me start first with setting the scene, and that's the financial sector, IT in the financial sector. Now, fintech is a very interesting name, and I'm always thinking, okay, but can you name financial service these days which is not based on technology? And probably you cannot, and I cannot either, except some really very, very minor things that are not significant at all. So financial firms are totally dependent on IT at least for their critical operations. So everybody's a fintech, if you wish. But what is then the defining element of fintech? I'll get back to it a bit later. We also see that IT is a significant investment and cost factor, has always been, but now it's even more. The technological complexity is truly amazing. I've started my career in cybersecurity almost 25 years ago. Life was much simpler then, but today with the cloud, with digital ledger technologies, with artificial intelligence, and soon, very soon, quantum computing, things are really very exciting. And unfortunately, this means cyber risk is increasing. Now, if I look a bit closer at fintech firms, what is there the difference compared to more established firms? And I'm not talking about the business model. I'm not talking about the way they operate or the innovative services they bring to the table, but the way they use technology. And that's quite different. So they are really innovative. So they are after the bleeding edge of technology. And often they use IT solutions which are not so time-tested as the traditional systems used by established financial firms like banks and insurance companies, the incumbents, if you wish. Also, they have more risk appetite. That's the whole point. So that's why they exist, because they take on unusual and interesting risks, sometimes quite high risks. At the same time, they are a bit less mature often. And this is a combination supervisors are a bit worried about. More risk appetite, less maturity, less time-tested IT solutions, innovative things, all good, all nice, needed, but it comes with higher risk. So cyber risk is increasing. We see that every day almost, and especially in the fintech arena, for the reasons I've just mentioned. So now we have a situation where cyber risk is quite high, and the question is, okay, but how we are going to deal with it in terms of regulation and then supervision? And then I'm focusing on regulation. Supervision is for another day. But in terms of regulation, how do we tackle this? Next slide, please. But first, a little bit on cyber risk, cyber resilience, and cybersecurity. These are terms sometimes used in a confusing manner. And I really like the World Economic Forum's approach. And they have this global cybersecurity outlook. They publish it every year. And back in 2022, they had this brilliant idea to visualize it like mitigated risk and residual risk. So cyber risk is really the residual risk, what remains after we really tried to take care of our security in the cyber domain. So just remember, in cyber, if we don't have controls, if we don't mitigate the risk, then the inherent risk is almost always high. Next slide, please. So let's take a closer look at cyber risk from a supervisory perspective. Where does it fit? I would argue that it fits neatly and completely into the operational risk box. Now, those who are bank supervisors and are familiar with Basel II and the framework, then in Basel II, the operational risk taxonomy is process risk, people risk, system risk, and external event risk. And that's exactly the same in cyber. I remember back in the late 90s, we say that IT risk, cyber information risk, at that time we didn't speak about cyber risk, is people, process, and technology, which is process, people, and systems in Basel II parlance, and also external event risk, which is basically the malicious external hacks and national disasters and so on. So, so much so that leading jurisdictions now put a serious weight on cyber risk within the operational risk taxonomy. And this is often close to 50%. So for those institutions who, those supervisors who deal with operational risk, and last time I saw was when I assessed the European Central Bank's practices in cyber risk, they put approximately 50% weight on cyber risk within the operational risk category, which shows the importance of it. So I don't think that there is anything else to say on the importance of operational on cyber risk within the operational risk framework. Next slide, please. So besides of being so important on an entity level, the problem with cyber risk is the systemic aspect of it. What do I mean by that? By that, I mean that there can be cyber incidents which are systemic, which means that the systemic institutions can be affected. Think of payment systems, which are basically the hubs of any financial systems. Think of the major banks or other major institutions. And those systemic cyber incidents can transmit to transmission channels to the financial world and impact financial stability, causing basically financial instability. And that's why central banks are so worried about it. Now, the truth is that we haven't yet experienced a devastating cyber incident that would really destabilize the financial system. But I can tell you from personal experience, having been at the IMF for more than 8 years now, and having been involved in some of the most severe incidents in our membership, there was a few occasions when it was a close shave. And by a combination of luck and skill, the financial instability situation was avoided. And you might not even heard about those situations. But bottom line is that cyber risk is of such magnitude that it can impact financial stability. And even though we didn't see an actual crystallization of this risk, everybody is really pretty worried, from the largest institutions to the small, from the large economies to the small economies. Everybody is focusing on it. Okay, let's see how do we approach a little bit closer to fintech. Next slide, please. But before that, a few words about cyber risk regulation in general. And this is a neat diagram that shows that basically everybody speaks about the same stuff. When it comes to cyber risk regulation, the most often used framework is the NIST Cybersecurity framework, which those of you who practice who are quite familiar. Those who are not, it's very easy to find out. And it's a pretty easy framework. And they have several domains within the cyber risk, and then everybody is trying to map to those domains. And this quick analysis of the interrelationship shows that basically 80% of the requirements in cyber risk are very, very similar. 20% are a bit different, but different enough to be quite a difficult approach in terms of international companies trying to get compliance. So it's sufficiently different countries, different jurisdictions, regulation to make life quite difficult. So we have this heightened cyber risk. Then we have regulation which is a bit fragmented. There are overlaps, there are gaps, and countries don't approach it very coherently. And as a result, there is quite a serious burden on companies to achieve compliance. And then compare that to the financial, to the fintech firms, generally lower maturity in terms of compliance. And you realize that, well, we have a problem here. And indeed, if you look closer to the cybersecurity stance of fintech firms, the situation is a little bit more worrying than, for example, at well-established banks. Now, at the systemic level, this is not yet a huge issue because generally speaking, the fintech part of the financial system is still not as big as to have a real severe impact on financial stability if something goes really bad. So that's the saving grace. But who knows what's going to happen in a couple of years going forward? Maybe their share in the financial system grows so much, then a systemic incident impacting most fintechs will cause financial instability, and that's the nightmare scenario. So with that in mind, how do we approach regulation? And again, I'm really thankful for Jacqueline pointing out a couple of really important characteristics of good regulation in general, which I'm going to show how do they apply to cybersecurity. But first, let's deal with the dilemma of the regulator. So next slide, please. And the dilemma of the regulator. Sorry, a bit we skipped. Can we get a bit here? The regulator's dilemma. And if we approach cyber risk regulation, then we have basically two ways to go about it: principles-based and prescriptive. In reality, the situation is not black and white. It's kind of shades of gray, and we can go very principles-based with very little prescription, or very prescriptive with very little principles involved, and somewhere in between we need to stop. But if we approach a mostly principle-based, if we have a mostly principle-based approach, then we have relative simplicity. Principles are easier to stipulate and are more stable. They are long-term. In fact, you would be surprised how stable cybersecurity principles are. We've got at the IMF a training course for about a week, another one for 2 weeks, and we always start showing that the basic principles of cybersecurity can be traced back to the basic principles of general security, which can be traced back more than 1,000 years. And this is not an exaggeration. If I'm looking at the core principles of how cybersecurity is achieved, it's almost like we can go back to the Middle Ages and even before, and we will find very, very similar principles. So principle-based, relative simplicity, flexibility, but it comes with uncertainty. So if I regulate at a very high level, then it's easier to interpret in divergent ways. And because of that, if our markets are not very sophisticated, are at a relatively low stage of complexity or development or maturity, then those divergences can cause trouble. So we might try a more prescriptive approach, telling more details of how to deal with cyber risk, in which case the regulation becomes more complex. We have many more rules. And then that's more detail, and it's difficult to maintain, especially as technology changes quite significantly. And that's why the point of technology neutrality is so important. I would go even further, and I would argue that what we need is technology agnostic regulation. So we don't care. It is not just that we don't care whether it is this technology or that technology. We can go in a way that we don't even speak about actual technologies. And that's the idea here in cyber, is trying to abstract from the actual technology. We speak about principles, we speak about concepts, we speak about access control, we speak about change management, we speak about protection, and we don't really care whether it is Windows, whether it is Linux, whether it is containers, or whatever it is. We don't care about that. So We can go prescriptive, brings complexity, but also rigidity. So once things change, we need to change the regulation. On the other hand, it also comes with certainty, more certainty. So then it's easier to supervise. There is less room for interpretation. There is less room for supervisory judgment. I would argue that supervisory judgment is very important in cyber risk. It's much more important than in other fields. I've been myself a cybersecurity and IT supervisor before I joined the IMF, and before that I spent a lot of time with leading consulting firms, and this professional judgment is at the basis of cyber risk. Why? Because it's a very new field. We don't have so much history, not so much maturity, and because of that, the experience of those people who assess a situation is more important than in other fields where we have more objective ways of deciding whether this is compliant or not. So remember, principle-based, prescriptive, and we have to find a balance between these two. We tend to argue that for advanced markets, more principle-based approaches are better, and for less advanced markets, maybe we do more prescription. But anyway, principles are there, and we should focus on outcome, not on telling institutions how to do things, but what to achieve. That's the important thing. What do we want them to achieve? And then it's their job to find out how do they achieve that thing. And we are quite agnostic about that. Just as I mentioned, technology is abstracted out from this discussion. Okay, let's move on now to specifically cybersecurity regulation for fintech. What questions do we have here? Well, the important question is, should it be different, really? And if it should be different, then how different? As you can see, it's kind of a leading question, really, but I like it. Let's go step by step. We know from experience that cyber risk regulatory requirements are more effective in an activity-based approach. And I refer back again to Jacqueline, which I really liked her presentation. In her words, it was regulation based on functions. Same thing. Activity-based based on function. We are talking about the same thing here. So I quite like this consistency. So activities of fintech firms fall under the same broad categories as traditional firms. So there are firms that will work in the financial sectors, more like banking, payments and stuff. Some others will do insurance type of activities. Some others will do more securities-based activities. But I didn't see a fintech yet which came out with something fundamentally new that couldn't be categorized in one of the existing boxes. That's not the case. So second, IT systems and processes are broadly similar across industries. So we say that IT is cross-cutting and cybersecurity is cross-cutting. And it is true that fintech firms use more innovative solutions, but the core technologies are similar. Even if they want you to think differently, no, it's at the core, those technologies are basically the same. DLT, they could argue that it's something brand new, but it's not. And it are used in several other places. APIs have been around since forever. The cloud has been around for like 15 years now and so forth. So those technologies are used in other places as well and in a similar fashion. And going forward, and even more, when I look at the good IT cyber governance and risk management principles that are also not very different across industries. So if you look at the telecommunications industry, you will see that principles in terms of how do we do good IT and good cyber security, they're almost the same. Now, what is different then? The difference is expectations. So what do we expect from those companies in the telecommunications sector, in the established financial sector, in the fintech sector? They can be different. And that difference is in the maturity of the risk management practices and the strength of the controls that we want them to do. For example, a payment system's availability, the strength of that availability, we put that much more emphasis on it than the availability of, I don't know, the insurance company's core system. For obvious reasons, if the payment system is down, everybody feels the effect in like minutes. And if the insurance system's core system is down, then they can just go about their business for quite a long time. So big differences in terms of how strong the controls need to be, but the controls will be very, very similar in essence, so the strength is different. Okay, and finally, good regulation, as we already heard, is risk-based and proportional. And in this way, a wide range of firms can be covered. Now, if you follow strictly this logic, then we arrive at the conclusion that if we had good cyber risk regulation and complemented with good supervisory, strong supervisory practices, then basically there is no need for significant fintech-specific requirements in the space of cybersecurity. So I'm limiting this statement on cybersecurity specifically. Obviously, there can be, and there are, fintech-specific requirements, and we heard about them previously. But when it comes to cybersecurity, because the reasons explained before, there is no need for significant difference or significant fintech-specific requirements. Now, of course, you can do it. It doesn't mean that you cannot do such requirements. For example, you might want to encourage fintech firms, but encouraging them by saying that, well, you can relax a couple of requirements or a couple of compliance burdens in terms of cybersecurity is very dangerous. Cybersecurity is at the basis of trust, and the financial system runs on trust. So if we weaken cybersecurity, we weaken trust, and we run the risk of financial crisis. So that's why our advice is that don't weaken cybersecurity requirements, even if you want to encourage the development of the fintech sector, and you have very good reasons to do that. Do it in some other ways, and make sure that they stick to strict cybersecurity requirements, just as everybody else in the financial system, because that's how trust is established. And just to think about it, fintech companies can be quite new. They could be market entrants. They might not be well known, which is in itself a risk factor. Now, if we compound that risk factor with trying to be a little bit more lenient on cyber, then we have a very dangerous combination. Next slide, please. So I'm at my last slide, and I have 9 recommendations for you if you're contemplating regulating cyber risk in general or specifically for fintech. But as I said, maybe think of regulating cyber risk management, cybersecurity overall for the financial sector, and pay attention to be proportional and risk-based, and then you automatically capture the fintech, no question about it. So first, this list is not by importance, it's just as it came. So cover both technology and cyber risk. Leading regulators realize that it is very, very difficult to splice these things. Why? Because many things that we do in IT to control our risk is exactly the same as controlling cyber risk. So how do you splice that? It's very difficult. So cyber risk needs to be regarded as a component of technology risk and regulate technology risk. That's a great idea. Consult the output of leading jurisdictions. This thing has been addressed before and has been addressed by quite serious supervisory and regulatory authorities. So why shouldn't we learn from them and adapt to our own needs? There's nothing wrong with that, and these are publicly available. 3, consult and use feedback of stakeholders. And this comes from actual experience. So just in Africa, if I'm looking at our technical assistance in Africa, we covered 13 countries now, actually 14. And we have them with developing such regulations or reviewing or improving or augmenting such regulations. So this is also based on our practical experience with actual projects in Africa. So consulting and using feedback from stakeholders is important because then they are not so antagonized. For example, if you come up with quite strict requirements, which I would argue it is needed for cyber risk, for the reasons I explained before, especially for fintech. We have internationally accepted cybersecurity frameworks, which our institutions already use. So the fourth recommendation is to map our requirements to those cybersecurity frameworks. We don't need to adopt any such framework as is. It's not like we go to NIST and say, we would like to use your cyber security framework, which will they happily say, fine, it's free, or not ISO or COBIT or nothing like that. But let's have inspiration and let's make it so that it is easily mapped. Why? Because these companies are already using such frameworks. And then when they see our regulation, it will be more familiar to them. And that helps compliance a lot. Now, a fifth, emphasize governance, risk management, and proportionality. I don't think that it is needed to speak about proportionality because it was addressed, but governance and risk management, these are the two cornerstones of good cybersecurity. How is the cybersecurity function put together? Where do they report? What are the reporting lines? What are the strategies, policies, procedures? They're all part of governance, and that's where it all starts. And then if we move forward, risk management is that component which allows us to understand what do we face, what threats are out there, what is the risk of those threats materializing, coming and hitting us, and us suffering losses. If we don't know that, then we cannot be effective in protecting ourselves. So risk management is crucial, and put that at the core of your cybersecurity regulation, governance, and risk management. And all the rest, of course, will come, but this is the focus we should pay attention to. 6, strive this balance, to achieve this balance. Sorry for the little bit of a missing word there. But we need to balance principle-based and prescriptive approaches. Neither extreme is good. So I remember, for example, to give you an actual example, Australia's cyber risk regulation was so much principle-based that it fit on like 3 pages. And it has changed significantly, and now it's much longer and much more specific and precise, and it is a good thing. And it is still principle-based. On the other hand, I've seen regulations 80 pages long, 100 pages long. I've seen regulation that says you have to have 2 fire extinguishers in your data center. What? Like, why 2? Why not 3? And what type of fire extinguishers anyway? And this is the level of detail you really don't want to go. So have this balanced. 7, if you're in a less developed risk management culture and practice in the financial sector, then lean towards more detail. There's nothing wrong in detailing a little bit more. What do you expect from institution? It doesn't mean that you are overly prescriptive. That's a different thing. More detail means that you are clearer on the expectations. So, for example, if your expectation is that they have a very good disaster recovery plan, then you can spend a bit more on, okay, what do I want you to achieve in terms of disaster recovery? I don't know, backup site, proper backups, monitoring of incidents, exercises, drills, tests, and so forth. We can have more detail there. 8, issue guidance on how to interpret expectations. We found that extremely helpful. So there is a certain level of detail in the cybersecurity regulation, and different people, different institutions will have different views. But you have your own view, and you want them to be compliant with that view and your interpretation. So it's nothing wrong with explaining, and that explanation can come from formal guidance. It can come from speeches, from interactions with the sector, and also from circulars. And also, most importantly, it can be conveyed through the supervisory practice. So whenever you have a fresh set of regulation on cybersecurity, then you go into enforcing it through supervision on-site, off-site, then that practice, as you enforce it, will convey a lot of guidance on how to interpret the expectation. And here, consistency is very important. We cannot go to one institution and say, this is how you do it, this is how we understand that you need to do, and then some other team goes to another institution and they say something different. No, there needs to be coherence in our messages. And finally, and this is a shameless plug, ask for technical assistance. So we really do have an effective program, a global technical assistance program in cyber, and we are very active in this field. And approximately 50% of the beneficiaries of this program of the IMF are in Africa. And this is a benefit of the membership. Everybody, every country in Africa, maybe one, it is not part of the IMF. So we are members, and with membership come benefit. And this is one benefit. Okay. Time is very short. Can we go to the next slide, please? Yes, here. Some resources. Really, if you just Google or ask an AI to summarize, there will be too much information. But as far as IMF goes, we have a couple of very interesting things. And first, in our cyber risk supervisory toolbox, which is a very interesting thing, I will explain it in a minute, we have a model regulation. It is not public, it's available through technical assistance, but if you don't have such a regulation, or if it is outdated, or you want to improve on it, or want to get it closer to international good practice, then this is a good place to start. And the other one, it is coming in January this year. We already have a final draft, but it needs to go through the approval process and clearance. We have good practices in cyber risk regulation, supervision, and oversight. It's over 60 pages material, and it summarizes all our experience. We have approximately 60 missions completed in the last 8 years on cyber risk regulation, supervision, and oversight. And we collected all those good practices that we encountered, and we are sharing that in this departmental paper. Next slide, please. A little bit of information about the cybersecurity toolbox I mentioned. This is something that we developed specifically with the needs of smaller jurisdictions, smaller supervisory authorities who not necessarily have all the money and resources in the world to address this important topic. So it's very practical, it's simplified, it's easy to adapt. Why? Because what we found is that often people look at what the major jurisdictions are doing, like the US, like the European Union, and they borrow from it, and they realize that it is almost impossible to apply for local requirements and local needs, because there's a very big difference in how the US works and a smaller, less mature jurisdiction work. And this toolbox is addressing exactly that. So we bridge the gap between the very complex, very big, very complicated approaches and tools and processes, and we simplified. We share that with quite many jurisdictions so far. The feedback is really very good. And even when we developed it, we sent it to test, and based on those tests, and the feedback, we finalized it. So I think it's really fit for the purpose of helping those jurisdictions who are not as resource rich as others. Okay, next page, please. And then if we have an outlook for what is available globally, then there's a bunch of resources. We have the Basel Committee on bank supervision, and they also address a range of practices. There are newsletters which are very useful. They also address fintech, and you will realize consulting those papers that in fact they have the similar approach. Like there's nothing substantially different in terms of cyber risk when we compare fintech to the traditional financial services. And then the Financial Stability Board has some good material as well. And basically, we were involved in all of these. So the IMF is a partner to the FSB, and even myself, I'm a part of the working group of one of these papers. So all in all, there are plenty of good resources. So, and because the time was so limited, I try to focus on the principles and try to show you how cyber risk regulation is not fundamentally different from other areas of regulation. There are a couple of tricks and things that we need to pay attention to. But basically, we need to be proportional, we need to be risk-based, we need to be technology neutral, agnostic of technology actually, and regulate based on functions, not entities. And with that, thank you very much for your attention. And I think I'm on time and we are ready to answer your questions.
Fantastic. Thank you so much, Tomas. It's a real benefit to have your experience from the IMF shining through the presentation in terms of the practical response, and then also sharing that toolkit, but more importantly, understanding the practical concerns that a lot of us smaller central banks face. So I didn't say much in the introduction, but I come from the Central Bank of Eswatini, where I was previously a central banker. And I could definitely see the practice of overthinking cybersecurity. And I think it was just very practical to take us back to the initial principles and how you can build from that foundation. Appreciating we have 15 minutes for Q&A, and I just wanted to provide a summary of what's to come next. I think I'll shoot back to the questions in the chat. So the first question is targeted towards Godfred's presentation. So Godfred, if you want to maybe turn on your camera. Oh, Jean-Louis, did you want to also add a few points in summary before we move to the Q&A? Sorry, I see on the slide, it's you next. Apologies.
Yes. I had 2 or 3 slides to conclude, and maybe we go to the Q&A afterwards, if you don't mind.
Over to you, Jean-Louis.
I have a slight disagreement about the FinTech tree we have seen at the start of the event, showing cybersecurity as a kind of a route or policy enabler. Because actually, we think that going to a more resilient financial sector is not only a matter of regulation. Regulation, of course, is important, but we need this whole process that Tomas has explained to protect the trees and to protect the fruits that are hanging on this tree. So I'm sorry to tell regulators and supervisors here today that strict compliance is not a guarantee for security. So we have to dig much deeper to find also other components. We have to see how to practically implement a trusted African cybersecurity community. And as Tomas said, the trust is one of the key component of the financial sector, the financial system. So it is important to find a way to build trust between peers to be able to share information, because each institution individually cannot match the rising level sophistication of threat. So SCRC has started to roll out information sharing local chapters that guarantee that on a country or in a regional level, institutions can share incidents, best practices, lessons learned, and build something together. Second, we have also started to develop several partnerships on capacity building and information sharing. The seminar today is a very good example. We have also the Alliance for Financial Inclusion that is starting. It has been validated last week by the governors, an information sharing task force. So it is to start in the next few weeks or months. It is important also to mobilize donors. When we go to financial inclusion, not only the larger banks, but also the more local elements, also many fintechs, it is important to increase the money that can be spent on cybersecurity, because at the end of the day, all of this is very expensive, and many institutions have not financial and human resources also to manage this threat. We have also capacity building programs with West Africa Monetary Union regional switch. We have exercises, cyber range exercises, which is attack simulation exercises that we are building for the Central Bank of West Africa Monetary Union currently. And we have also a partnership ongoing with the Macroeconomic and Financial Management Institute of Eastern and Southern Africa, gathering the 15 central banks of the region. We have also already done a very interesting course with Tamas from the IMF in July, and end of September we'll have another meeting on banking supervision and financial policy implementation, specifically about AI with the Bank of International Settlement. And we have also strategic and regulatory advisory services. We have worked with the EAC Secretariat and the regional central banks to create, in partnership with Centri, the roadmap for the future financial system. We were in charge of the capacity, the cybersecurity side. So next slide, please. So we have also now operating in 15 countries in all regions of the continent. So we have something like 63 financial institutions that have started to share this information about threats, about vulnerabilities, and so on. We have also disseminated 84 critical alerts. This is a red flag. Please in emergency patch your system for this or this component. We have a monthly newsletter. We have developed 10 training courses with more than 32 days in overall of original content, a number of webinars, threat intelligence reports, where we have analyzed for the first time the advanced attackers group targeting the African financial sector. We are connecting also information from 33 global CERT or information sharing organization, and we have a database with more than 60,000 indices of compromission, as we call it in our vocabulary, that are what is happening, who is trying to enter in your in a company. So things are moving, and now we need more engagement from the community. That this will complement the next slide, please. Complement the regulatory efforts, which also have to be enlightened by this direction. So building capacity on the African threat landscape is very important. We have seen that regulation are about the same, or should be about the same as what we see in other sectors, financial sectors, or even other sectors. And it is also quite close to what can be done at a global level. But in Africa, we have really a very specific thing, is that the fintech field is, there is a very high number of DFSPs, and they have also very limited resources. So we have to find a way to leverage a collective intelligence collaboration between these all these guys all together with the central banks, global or regional institutions like the African Development Bank, the Alliance for Financial Inclusion, the Interpol, the IMF, and so on. And SCRC is a kind of trusted party to manage this with you as a community. I have finished, Sabelo, and so we are now ready to take some questions.
Thanks. Yeah, so I was going to provide a brief summary of what the presenters really underscored, but I think in the interest of time, we'll just shoot straight to the Q&A, and then I'll just summarize what's next to come in terms of the next webinar. And pulling from what Jacqueline highlighted, and I think all the speakers today have highlighted consistent challenges across, but one of the main ones, of course, is consumer protection. And the next webinar will be on the 23rd of September, and that will be covering DFS consumer protection. So a lot of you might be trying to grapple with some of the issues there, and I think that framework and that webinar will provide that backbone in terms of your understanding. So the first question is for Godfred. Godfred, I think this comes from Zerihan, who's asked how the BOG has been regulating and supervising interoperability, the system itself of interoperability. And I think you mentioned the IPS structure that you already have in place. So maybe you could just provide a brief summary over the your approach to regulating interoperability and how that plays out in the field. Thank you.
Okay, thank you very much for the question. So the interoperability, the infrastructure itself sits with a subsidiary of the Bank of Ghana, which is GIPS. And then it is also supervised by the Payment Systems Department, who have oversight responsibility of the systems, that's the financial market infrastructures that we have in the country. So that's how we go about it. First, the platform sits with our national switch, which is a wholly subsidiary of the Bank of Ghana. And then the Payment Systems Department of the Bank of Ghana have oversight responsibility of that institution. Thank you.
Thank you. I hope, Zerihan, you answered there. And the next one, I think, also relates to your presentation, Godfred, in terms of how the BOG goes about limiting the proportion of digital credit against the conventional credit portfolio of financial institutions.
Okay, so first off, the wallet that is receiving the digital credit has its own limits on it. So for the mobile money space, we have tiered KYCs and the limits that is applied on these wallets, as well as the bank has also given a limit for digital credit, which is in the guideline that will be published for them to operate with. So there are prescribed limits, one on the wallet end, and also the bank's prescribed limits as well.
Thank you for that. The other one I think I could answer, but Gennard here has stated it's for Ghana, so I won't answer it myself, coming from a fintech department myself. So the question here, Godfred, is where do you draw the line between the payment system department and innovation department? And maybe just for some context here, a number of the participants today would have naturally been coming from payments. So of course, they're trying to now piece together where innovation is pulled in and of course where cyber is pulled in. So maybe speak to how you draw those Chinese walls between the departments and where there's overlaps perhaps. Thank you.
Thank you very much. So in the Ghanaian context, like you rightly indicated earlier, the payment system department is solely focused on the banks and then the SDIs, then who are providing payment services, as well as the infrastructure, the payment infrastructures that we have, that's the PFMI that we have in the country. Then the Fintech and Innovation Office looks at non-banks, that's the payment service providers, who are also bringing out innovative products when it comes to payments. So although both are payments, we are looking at non-banks providing these services, then for the banks providing services going to payment system. So that's the line between the Fintech and Innovation Office and then the Payment Systems Department. So the Payment Systems Department mainly focuses on infrastructure as well as the bank's supervision. Then the Fintech Office looks at innovation when it comes to non-banks providing these services.
Yeah, and maybe if I could just add a great point you've raised there, Godfred, is also having that division between how the central bank innovates internally and how the payments directorate or department has led to a lot of DFS innovation naturally. Most of the innovation we've seen across is in the payment space. However, the Innovation Office also has a role to, I guess, catalyze innovation, both in terms of market engagement, but then internally within the central bank. So quite a lot of innovation offices also are more internal looking, and they come up with innovation challenges. So some of those divides could be more along the lines of looking at innovation as what is new about the central bank? What can we do that's new? What can we do that's efficient? And how do we encourage that outside in the market? Not making it a payments agenda, but making it an innovation agenda. And I think that's also another way you can make that clear divide.
Yeah, exactly. So if you look at the CBDs, the central bank digital currency, like for instance, it sits with the Fintech and Innovation Office, which is we exploring innovative technologies that is springing up for the bank internally, and other things. Yeah, thank you.
Sure. The next question, again for Godfred. This is an interesting scenario here. I'll read it aloud. It's a bolt-on question from Ganad. He's highlighted he's asked how does the BOG monitor fraud activities, and he's provided an example in Malawi where fraud is pioneered, or I guess done through social engineering orchestrated by inmates in one of the country's prisons. And then I think here he's asking, I see Tomas is nodding his head. It's a strange one. And then the second part is, has Ghana experienced the same? These prison syndicates operating as inmates, but also then I guess having an inroad to fraud. I've never seen a model like this, so I'm very interested to hear other answers as well. Thank you.
Yeah, I think I'm laughing because it's something we've also experienced. The social engineering is crazy when it comes to the fintech space, especially the mobile money space in Ghana. So like I indicated earlier in my presentation, we work with external stakeholders, which include the law enforcement agencies. So what we do is that some of these, we have a department in the bank, which we work closely with. It is called the Financial Stability Department. They have a unit they call the Market Conduct Unit. They do their own investigations when it comes to some of these fraud, and they take fraud reports from the institutions that we regulate them. We also conduct our own surveillance exercises to fish out some of these social engineering works that is ongoing. But what we do is we will work closely with the law enforcement agencies. So we come out with our report, we send it to them for them to do further investigation and also prosecute people who are found to be doing that. So I think that is the approach that the bank has in dealing with some of these issues, and also going on education campaigns as well.
And just quickly, do you also have some kind of a consumer detection mechanism as well to pick that up?
Exactly, like I said, the Financial Stability Department,
okay,
they handle most of this. So all these things will be routed through them. Then if they need our assistance, then they come to us for us to engage them. So as part of market conduct, we have consumer protection under that.
Thank you, Godfred. Ganad, I hope you answered there with regards to your inmates as well. That's an interesting one. The next one is from Marcus Davies. I think Tomas here, he's asked if you could please share some insights on approaches to implementing a financial sector operations center with a key focus on the key benefits and main challenges involved for less mature markets, so developing countries, I guess.
Yes, thank you for that question. There is a continued interest in security operations centers. And I think Marcus was referring to operation centers, security operations centers, or SOCs, that address the entire sector. So it's kind of a shared security operations center approach. There is limited success in this, I'm afraid. So it is perfectly okay to find a third party that will provide security operations center functionality for individual institutions. But attempts at centralizing it and having one center point of focus to for example, collect all events real time and then try to react to them, they weren't very successful. What was successful, though, in developing markets is to establish a national CERT meaning Computer Emergency Response Team, which is a bit different from an operations center. Which will answer to requests for help in case of actual incidents, and that's really very helpful. I would encourage every nation to consider very closely. But most nations already have it. The question is, do we want something that it is specific to the financial sector? And I would argue that unless we have sufficient resources, it's not a good idea to fragment those resources in two different certs. So it's better to start with one, and then later on, after we have maturity, maybe 10 years past in mature operations, then we can think of spinning off something for the financial sector specifically.
Thank you, Tomas. I hope, Marcus, you answered there. I see a thumbs up. We'll move on. The other one speaks to who to ask for technical assistance. I think that one is self-explanatory. That's the IMF in this instance.
Yes,
and
there is an easy way. Just send me an email, and then we can then discuss it further. Or if you're directly going official, then it is through your official connection to the IMF through the executive director, which represents you in the IMF. So every country has representation through an executive director. Some executive directors cover more countries. That's the official way. But to simplify things, you can send an email to me, and then we can take it from there.
Yeah, and I also recall from previous career where there'd be a request either from the international office to the internal departments of central banks asking for areas, subjects or topics that they need technical assistance for. So possibly, I think, to the participant who asked that question, just to have a look at the relevant channels within the central bank to ask and flag that you would like technical assistance there.
Exactly.
Akali's question here, is it possible to share reference materials? I think you shared the toolkits as well and all those papers. I'm not sure what else.
Actually, there is an important distinction. So the toolkit that I mentioned, the Cybersecurity Supervisory Toolkit, is not public because it contains some quite sensitive information, but we make it available through the technical assistance I mentioned.
Okay.
Because it comes with some training, and we want a consistent approach across the globe. So whoever uses, we want them to use it in a similar way. But all the others that I mentioned are public. So you just do a Google search on their titles I shown. And the other one, the good practices paper that I mentioned, is coming up in January 2026, and it's going to be public. So at that time, it will be available.
Brilliant. So just heads up there. I think it was Akali. Have a look at that 2026 paper when it comes out. It looks very comprehensive. And at least you've had the first-hand experience speaking to one of the co-authors. The other one is, I think, Godfred, maybe you want to go for this one, or possibly even Jacqueline. I can also probably provide an answer. As part of international best practice, are fintechs allowed to disperse loans to the public without partnering with banks or MFIs? So, Godfred, do you want to have a first stab?
Yeah.
There's some background noise on your side, Godfred.
Sorry.
No problem.
Okay, so we mentioned about areas that the fintechs are disrupting, and we mentioned that lending is part. But in the Ghanaian context, a fintech cannot lend without partnering with the banks or a financial institution, because our laws mandate that credit activity or lending activity is a regulated activity solely for the financial institutions. So basically, they have to partner with fintech. But that notwithstanding, that's what we came out with, a digital credit service providers guideline, which seeks to establish another entity, more like an entity that can lend digitally on its own books. So it is something that the bank is currently exploring. We've done the guideline. We've come out with a guideline. The requirements for such service providers will come out soon. So I think that is where we are currently in Ghana.
Thanks, Godfred. And maybe, I don't know, Jacqueline, did you want to add any more to that? I mean, there's always this tension between providing too specific regulation about which kind of DFS activity should be licensed versus allowing the fintech players to find where they want to play the most. Jacqueline, if you're still there, maybe you want to add to that. If not, no problem.
Yeah, let me chime in. Yeah, so increasingly with how blurry the fintech business models are, it's becoming an interesting question. But what we see typically is that in many African countries, fintechs that wish to lend directly to consumers must be licensed as non-bank financial institutions, or even obtain a digital credit provider license. So for instance, in countries like Kenya now requires digital lenders, those that are not partnering with banks, to obtain a license specifically from the central bank under the Digital Credit Providers Regulations 2022. And this move, for instance, in the Kenyan example, was just to bring those digital lenders under the formal oversight, as opposed to how it was previously, where they are collaborating with banks, but not having being licensed themselves. In other climes, like in Nigeria, for instance, fintechs must secure specific lending licenses, and this can span from microfinance, money lender licenses, etc. Or otherwise, they must partner with a licensed bank. So essentially, in many countries, the fintechs are tied to either get that license by yourself or partner with a licensed provider, such that you are acting as a technical service provider. So bringing in the advantage of more agile channels for disbursement and repayments, but not necessarily the other way.
Lost you there, Jacqueline. I think you were concluding. Thank you. No, it's such a vital point, and also just to re-emphasize the whole thinking around the landscape expanding to be more inclusive. And I think that's where the legislation is going to support new players coming in. There's a whole issue around consumer protection where digital lenders are concerned that's growing, especially in Eastern Africa, trying to figure out the extent in which interest is being provided. It's very hard to monitor where digital platforms can't be accessed by some of the central banks. So I think the next webinar 2 on DFS consumer protection on the 23rd of September will answer a lot of those concerns that flow from this wider set of fintech players in the ecosystem and how to manage that risk against consumers. So that's where we'll probably call it a day. We've gone over time slightly, but I can see most of the attendees are still online. So that would mean one can only assume we managed to captivate the audience. So just to give a round of applause to our presenters today. We really appreciate our speakers, the time you've taken out to share your expertise, and also just to thank ADFI as well and the rest of the team in the back office, just making sure that we can continue this journey and this series of capacity building as we make our way to the physical session. So we look forward to seeing you in the next engagement and the next technical sessions to follow in October, and then finally the physical session in November. Thank you all, and we'll be sharing the slides, I think probably within the next hour or so. Thank you very much. It's much appreciated. Enjoy the rest of your day.